So part 2 of the 5 dividend stocks in 5 days in under 5 minutes. We've got a bit of a treat for you here. So without further ado, make sure that like button is turned blue. This is not financial advice, but if you want to sign up on eToro, check out the pinned comment and you get chat room access for life. Let's get the timer started and go. Today we're going to be talking about one of the biggest chains in the world, a household name, that is Walmart. This supermarket chain is absolutely ginorcopod and it is growing and has some great potential to continue growing in the future. It's by far the largest grocery chain in the US with a whopping 4,600 stores and has much more room to grow in terms of expansion. Now looking on the chart, this absolute beast of a grocery store probably doesn't look too appealing in terms of value. But think about it, in a recession, people will still be shopping at Walmart. Old people will want to go and get their booze and young people will want to go and get their rubber johnnies. But slightly sticking with the chart here, if Walmart did go back up to its all-time highs, and again, past performance is not an indication of future results, but if it did get there, that's a 10% gain in itself, so you could argue that there is some value there. But it's got a proven track record of smashing earnings and grinding upwards over a long period of time. Let's have a little dive into the fundamentals. It's an absolute beast of a market cap, $370 billion US dollars. And if we look on Simply Wall Street, they seem to think that Walmart is currently 25% undervalued, which is mental because it is again 10% away from its all-time highs. Their PE ratio is 32, which I don't think is bad at all given the current market, and their PEG ratio is 4.1. Simply Wall Street doesn't think that's quite good, but in my opinion, 4.1 is a pretty good PEG ratio, especially in this whole market where everybody's debting themselves up to the eyelids. Speaking of financial health, let's have a little look at their assets and liabilities. They look pretty solid in terms of short term, and in the long term they've got 159 billion in assets with 71 billion in liabilities. And if you throw that in with their debt to equity ratio of 52, this company seems to be in great financial health. Their dividend is nothing mega though. They offer a 1.59% at the recording of this video dividend, but I think that's actually not so bad. Given the fact that people are scared right now and they think the stock market's going to come down, take anything you can get. 1.6% from a company that could be in theory recession proof, I don't think that's bad at all. You could even take them dividends out and go and prepare yourself for the zombie apocalypse. If we look at all the professionals and all the analysts on tip ranks, we can see that there is 19 ratings, 15 of them are buy, 4 of them are hold, and there is 0. Nobody thinks you should sell this stock. If we accumulate all these analysts together and look at their 12-month price target, their average price consensus is a whopping 23% upside. That's crazy for a company, again, riding near its all-time highs. Walmart typically outperforms the S&P 500 as well, so is it a buy? Tell me more, tell me more. Did you get very far? Walmart's future does also look bright. They brought out Walmart Plus, which is basically a subscription service that they think could rival Amazon Prime. And we know how Amazon turned out with its next day delivery service. I mean, imagine you're throwing a last minute party and you order some booze, some barbecue meat, and of course some lubricant, and it can come within a couple of hours to your door. And you can throw that party with all your best friends, and hopefully your nan doesn't get too lubed up, but you can throw that party in a couple of hours at short notice. But many people have signed up to it. I'm a big fan of subscription-based models. It's basically free money once you've got the infrastructure in place, and we've seen companies like Netflix, Amazon, even Apple take control of this whole subscription model, and it's a proven fact that even GoPro now has a subscription, and to be honest, GoPro's thriving because of it. Now, the big problem I see with supermarket chains is people are shopping more and more online, and maybe the days of going into the grocery shop, our grandkids will be like, what the hell was a grocery shop? But Walmart is moving more to that online business, again with the next day delivery to door service. I think Walmart will move more to that aspect, and it's going to be one of the few retailers that can actually keep its shops open just because of its sheer size. We've seen many high street shops, retailers, clothing shops go pop over the last couple of years because of this whole Miley Cyrus. Walmart's literally got a unique situation because not everybody needs Prada shoes, but they definitely need to go to Walmart and get as much toilet paper as they can and run out the doors as quick as possible. Again, for me, with times being very uncertain in the future, I do think the stock market is way overdue a correction, maybe even a full-out recession. And if that happens, Walmart, in theory, should be a lot safer than your usual tech companies because people are still going to there and buying sausages and buying guns, because yes, apparently if you're watching in Europe, you can buy guns in this shop but people will be still buying stuff from Walmart and their earnings should be quite decent. I do think their earnings will take a dip as people be more conservative, but nonetheless, people are still going to be buying. Now, the big question, am I buying Walmart? Am I in Walmart? Am I selling?